For 10 years, one rule dominated Australian property investing. Never buy Melbourne apartments. And the data backed it up. Too much supply, cranes everywhere, prices flat for a decade. Every expert said the same thing.
Times are tough for investors trying to offload units and apartments here in Melbourne. As Chris Kohler discovered, 1 in 5 is now selling at a loss.
But something's just broke. When you look around, you no longer see the cranes in the sky. When you go on Real Estate and Domain, you start seeing that the price of these apartments are trading below the actual cost it is to build the thing, which makes no sense. And that's exactly why the cranes have stopped going up. That has never happened before. And at the same time, the population is surging. A $1.5 billion hospital has just opened and vacancy rates are near zero. And yields, they're hitting 7%. In this episode, we go to the ground floor. We walk the streets of Footscray. We show you specific properties, the exact numbers. It's a 2-bedder, 2-bath, 1-car spot, and it's selling for around $500,000. And the 3 types of apartments that are worth buying right now.
What I like about this pocket is the opportunities that we are talking about.
This isn't a prediction because Alaya is already buying here. We are deep diving into a special episode, episode 2, where we identify one of Australia's greatest property opportunities that exists today. I've said it time and time again, the everything, everywhere, everyone property boom is over and it's time to play defense. Now we are going through exactly what we are doing at Alaya and how you can play it too. We're going to go through the second episode of the great opportunity that we talked about. Melbourne apartments, specific type of Melbourne apartments are going to go on a tear pretty soon. Now we're going to go into one specific location and go through exactly what we are doing step by step. And you can follow this exact same formula and apply it to other locations to see if it suits you. We're talking about Footscray here today. We're going to go through its economy. We're going to go through its infrastructure drivers. We're going to go through the macro reason why we love Footscray apartments. And then specifically, we're going to go through the 3 apartment opportunities that you should be looking for in this marketplace right now. And we're going to give you the very properties that Alaya is purchasing right now. We're going to shoot ourselves in the foot again and drive up competition from the thousands of people who watch this, but it's the right opportunity and unpack it at a numbers level for you. Adi, I'm pumped for this, man.
I'm really pumped for this. You know why? While you were doing your spiel, you know what I was thinking about? I remember the episode that we did on Dandenong and how we were quite critical. So I'm really glad we're actually focusing on a region where I used to live. And we can actually talk positively about it.
Did you live in Dandenong?
Well, near Dandenong, near enough to Dandenong. So I'm actually quite excited about this. I used to live in Footscray. I lived in Footscray for 4 or 5 years in my 20s. I've seen the place change as well, evolve over the last decade or so. I think I'm especially excited about, the opportunity that exists in this particular market because I'm quite familiar with the market as well, having lived there for, quite a number of years. So yeah, it's an exciting time. It's a bold prediction, right? It is a bold prediction, but it is so grounded in the data that I'm excited about what 2026, 2027 holds.
I'm so confident in this. I said in the previous episode, I'll go buy a bunch of these apartments just to show everyone how confident I am on this. I recall thinking the same thing about Darwin, and I said it to everyone then. I said it very clearly on this channel that I will not do it because I thought I had an integrity issue where it's just like, hey, I'm saying that a bunch of buyers are just going to go buy here and property investors, so let me go buy it and then use my very platform where thousands of people watch to go buy that. So I was very conscious of not doing that. But this is different. This is not behavior. This is just underlying data. It is so strong. Okay, let's start with a quick little recap. Adi, can you give a quick little recap of the Footscray market as to why are we actually promoting apartments in the first place, Footscray apartments. So if anyone hasn't seen the previous episode, you can just give a quick little snapshot of it.
Yeah, let's do it. So Footscray apartments, the reason we picked Footscray was it's one of those markets where you sort of drive through and the apartment glut that exists is very, very obvious. And I wanted to pick that market very specifically because it's where sort of I think where the inception of this demand surge is going to start. It's very, very close to the CBD as well. I think I said in a previous episode, I used to walk there, walk into the CBD while I was living there. So it's about, as the crow flies, it's probably about 5Ks, but, walking distance, probably 8-9Ks. So you're 20 minutes drive into the city. It's connected with trams. It is a fully established suburb. The reason I really like it for the apartment story is it has many different types of assets that are attractive to investors. You have the type of asset I used to live in, which is, sort of part of a small block, 12 apartments, 40, 50 years old, red brick, really well built in the 70s. You have the newer blocks as well. You have the high rises, the 1,000 apartment blocks as well. And then you have blocks of apartments that we have also been purchasing for a specific type of investor. So I think Footscray allows a breadth of investor activity over the next 2 to 3 years.
Mm-hmm. Driving right through Footscray at the moment, you can see a semi-new apartment block here. This is probably 5 to 10 years old. And what you see around us is you see a bunch of industrial large holding sites here. So right beside me is a very, very large land lot. Typically these would be turning into apartments. It's the exact sort of product that changes over time. But what you look around now is I'm in Footscray. There's a new hospital here. We're right next to a university. There's low-rise apartments everywhere around us, but there's not a single crane that I can see or that much construction at all in an area not very far away from Melbourne CBD. The whole reason why construction isn't happening here, it isn't planning controls, it isn't limitations, it's simply feasibilities.
It is very, very obvious when you sort of drive through Footscray that apartment makes up a large portion of its sort of population as well. And what I really like about it is that it's still in the affordable bracket. So if you look at the median prices for apartments, you are really looking at anywhere from, you could get something for in the mid 300s all the way up to like the mid 500s. Sure. And there's a few different factors here that sort of make it really attractive for me. And why we've been sort of pursuing the Footscray market for some of our investor clients.
Very cool. So let's unpack that a little bit. You gave away the 3 opportunities that we're looking at: new-ish apartments, existing apartments, and blocks of units. Those are the 3 opportunities. We'll delve into each of those specifically and the type of profiles that fit you as to which one you should go for and what I like about each. But before we go into that, here's a quick little recap. The approvals are sinking. Feasibilities are dead. Apartment glut of extra units that were there is over. There's no new apartments coming in. Population growth rates are strong. We're talking about an inner city type location, but not directly into the city. You're talking the fringe suburbs, the fringe CBD suburbs. Migration levels continue to rise, both from overseas and interstate. And you have the broad macro backdrop of rising interest rates pushing people down the affordability spectrum, and the lowest quartile values are rising the sharpest, and that will continue. You have the hallmarks of really tight supply and really strong demand, or increasing demand, not strong demand, but increasing demand. You have what you need for price growth to happen, and you have a supply shortage that's kicking in increasingly every month that we go further into the future. The bigger that supply crunch happens, and that is going to push price growth, which will then restart the apartment construction cycle at some point in the future. So that's the broad narrative as to why we like apartments. And the Footscray narrative fits this perfectly, and we've identified this suburb for this specific episode because it's the second episode of this series where we're investigating the greatest opportunity that we see today, and now going at a suburb level of how to take advantage. Footscray, can you give me the local insight? What's going on there? We'll show you a bunch of clips and videos through this episode too, because we have gone through there. We've spent time there. We've looked at opportunities. We went through house after house, apartment after apartment, block after block, looked at it and have a little clip. So we'll show you a couple little clips through this episode as well at different points. Might seem a bit strange to you, but we're trying something. So comment below if you like it. Can you tell me why is Footscray a good suburb right now in terms of what is actually happening there that's driving demand?
So If I can just reference the previous episode briefly, what we sort of talked about, I mean, the logical flow here was that, historically, Melbourne apartment scene has not been great because there's been a glut of supply. Too many apartments were being built relative to the demand profile that exists for that type of asset class. What we've seen, so if you wanted to look at the numbers for Footscray specifically, in the last 12 months versus the 10-year average, we are seeing 450 approvals versus an average of 1,600. That is a 70% decline in the number of approvals that are going through the books. What does that actually mean? So there is a glut of supply available. So developers understand that, okay, this is maybe not the best sort of market to be pouring their capital into. That then translates to less activity, less building activity, right? Which then means that at some point, the existing supply that isn't in a market like Footscray will be absorbed by the demand. Now, the reason the demand profile, the question that you asked, why does the demand profile for Footscray look so strong, is because there's so much activity happening. Let's talk about infrastructure, right? One of the big projects that have just sort of completed, I think we drove past this.
Yeah, let's put a little clip on it.
Yeah, we drove past this.
So here we've just passed the university here, and this university is closely connected to the hospital that's just been built as well nearby. It's been a 4-year project. Western Health Footscray Hospital is open for patients right now, connected to Victoria University, a training facility for a lot of medical students, nurses, support services, everyone in allied health as well, to create jobs and opportunity for the community around here. A centre point location, a momentous change for this entire marketplace here in Footscray. You look at what we've just passed, you see 4,500 plus jobs attached to the university, a whole change, the level of people here and the amount of income generation, support services.
Is the Footscray Hospital. There's a massive development, over $1 billion worth of capital invested in the hospital there.
What have we got?
That
1.5 billion. Oh,
1.5 billion.
Big
right?
hospital.
Huge
Massive.
hospital. We drove past it, right? It took us a while just to drive past it.
Yeah.
That's driving a ton of worker activity as well. There's going to require thousands of people pouring in to actually support the infrastructure that is the hospital.
5,000
which
jobs.
is crazy. 5,000 jobs, right? For a single hospital. So you can imagine the magnitude of what this actually means for the local suburb, the amount of demand it'll take, or the amount of demand it'll pour into a suburb that is very quickly becoming quite supply constrained, right? So you think about what that dynamic means on a broader scale. There's also the Victoria University, right? It has, I think, the capacity for like 10, 15,000 students. So there's a lot of activity happening at a student level as well. Now, that's going to be then pouring. If you think about the general profile of a student, where do they typically live? It's usually apartments, right? So there's a lot of demand profile that's going to be coming from the student aspect as well.
Is that university new?
No, it's been there for a while.
there.
Yeah,
Okay.
it's been there for a while, Victoria Uni.
Yeah, there's some connection between the hospital and the university. I think it's a training facility for
It is.
the hospital.
Yeah, it is.
Is that right?
It is, yeah. There's definitely a part of the university that is geared towards training some of the staff there. So, which is very cool because they're very close to each other. We drove past it, right? It's
Sounds a lot like Randwick, the suburb where I live in.
There you
Sounds
go.
a lot like Randwick. It's got the
Eastern
biggest
Sydney.
university, a very, very big university.
Yep.
There, a lot of Sydney-siders go there. It's got the hospital precincts. It's
Mm-hmm.
rebuilt a new hospital precinct. That's massive, beautiful tower there.
Yep.
And they're all connected with each other. The students go to there. And yes, it's also 4 or 5 kilometres from Sydney CBD and has a lot of demand. And houses there trade really, really highly where you can find the right opportunities. And there's obviously lots of apartments and red brick type dwellings in and around. So it's got a lot of similarities to it.
It does. So when you look at the sort of balance there, right, you have a supply issue that is quickly become an issue. The pipeline is drying up. People are not building as quickly enough. But then there are people pouring in on the other end. So the demand profile is increasing. The student population is increasing. Interstate migration is starting to sort of trend back up again. Overseas migration into Melbourne. There's a lot of demand drivers there, underlying demand drivers there. So when I put it all together, Footscray to me is quite an exciting opportunity for the subset of assets that we're looking at.
Should we touch on the low? I presume Footscray has some stigma attached to it. I could feel it when I was there.
Yeah.
Like, it was very obvious. I was like, this isn't a place that I like. It doesn't feel like cool hipster Melbourne. feels like grungy, a bit underdeveloped.
Yep.
And clearly the type of personality that lives there is a bit different as well.
Yep.
And that's reflected in the pricing as well. Can you tell me, can you give the audience a little bit of a flavour of your time there? You lived
absolutely.
there.
Yeah, for sure.
So Adi, you've spent a lot of time here. You lived in one of these apartments that we're just walking right past.
Yeah.
Can you tell us about the area?
The area is fantastic, man. There's a Footscray hospital, not like 10-minute walk from this direction. There's parks everywhere. It's a really, really quiet neighborhood as well. There's a lot of families. Like I used to live in this apartment by myself, but around me was predominantly families. Quite a safe neighborhood as well. Footscray historically has been a little bit sort of dicey.
Has it?
But it's definitely gone through a really strong gentrification process. Now this pocket of Footscray is definitely the more affordable pocket. Now, if you sort of drive 10 minutes around the corner, you've got these really big high rises of, brand new apartments where the rent is significantly higher.
Yep.
But what I like about this pocket is the opportunities that we are talking about. These are all blocks. If you just sort of look around, these are all blocks of 12, 15, 20 units. They've been around for a while. They're double brick, most of them. They're really, really sturdy. These are the kind of apartments that are just not being built anymore.
Yeah.
It's very, very rare.
So one of the big upsides for property investors is when you purchase in an area like this, there is a difference between purchasing in a 12-pack or a 15-pack
Yes.
versus a 20-level tower where there's 80, 90, 100, 200 apartments. One of the reasons why you want places like this is as a property investor, you want to make sure that your valuations on your properties continue to rise over time and are not too influenced by so many comparable properties that are pretty much identical. Here you have much, much smaller complexes. So for property investors, that's something to always be mindful of, is if you are looking in the apartment space, you want to manage your risk. And purchasing something older is getting the same type of product, the same reasons, with far less risk. And that's the main reason why you're looking at places like this.
Yeah, and I think if it goes back to the fundamental sort of argument against supply, right? So some of these 1,000-block apartments, the reason historically that they've performed really, really poorly over the course of like 10, 15 years, whereas other apartment blocks have really just performed at least at the average level, is that number 43 is the exact same as number 45.
Yep.
Number 45 is the same as 57, 69, whatever it might be, right? So people just have a ton of choice. And I think for the same reasons, rents actually haven't improved in a lot of these apartments as well. I know a lot of my friends live around these apartments. They've been on sort of like similar rents for a long time as well, because they just have so much choice. These ones, on the other hand, are completely different. The product is fundamentally different. There's very rare, like these, it's really, firstly, they don't come up for sale very often, because they're historically with families who've been there for 20, 30 years. But the opportunity is just very, very different. So I think the landscape, especially when you look at pockets like Footscray, there are other markets that we'll go to as well, where we'll talk about this. These 12, 15, 20-pack apartment blocks are kind of for a low-risk investor who's seeking, something around that 400K price point, which is, affordable. They want lower risk when it comes to rental yields. They don't want to be, pinned down with a 3%, 4% yield, which is quite common in Melbourne. They're looking for a 6.5% yield. They're looking for capital city. They don't have a lot of capital to deploy. They're looking at about 35, 40 grand. It's a perfect opportunity.
Right. The Footscray of today looks very different to the Footscray of 10 years ago. When I was there, it looks very different to the Footscray of 10 years before that. So Footscray looks really, really different. When you say there are no sort of it looks a little bit grungy. If you sort of go through the middle of Footscray, yeah, it's still like the primary sort of the beating heart of Footscray. Yeah, it's a little bit grungy. But then you start seeing all these hipster cafes pop up. Can't remember this one. I'm trying to think of the name of this one, and I'm sure they would kill me because I can't think of the name of it right now. But it's a beautiful cafe that's made out of like a shipping container, and it's it was like the place to be on a Saturday morning, right? So there's a lot of these. There's the Moondog Brewery that's there as well. There's a lot of activity. It's very cool, and that gentrification is starting to sort of seep through because a lot of people, like whether it's students, whether it's young professionals, they want to stay in a place which is 3 or 4 stops away from the CBD, where most likely their job is. So it has gone through a gentrification process, and I'm going to assume it's going to keep going through that gentrification process because, again, you're only like 4, 5, 6 kilometers away from the CBD. So I saw it change. I saw some pretty dicey things while I was there. It does have quite a large immigrant population from the 70s and the 80s, right? But over time, as the sort of the population profile changed, we started seeing a lot more like, trendy bars coming in, trendy cafes coming in, trendy breweries coming in. And that sort of started changing the profile of the people who are...
Meets the cool test.
It does. It absolutely does, man. I would love to have, whether it's an apartment or a house in Footscray, it's definitely the place to be. And in 10 years' time, it's going to look very different again.
Very cool. Let's also quickly just touch on vacancy rates, really low across the area, really, really healthy. Makes sense with the demand profiles that we're talking about. And a hospital goes in, that's going to add in a lot of people. Pretty sure the hospital just opened as well. When we were there.
It's just opened. I think it was like a week before that, 2 weeks before that.
So that creates demand over time as that hospital starts using more and more people start using it and gets more full. So you have a lot of the underlying reasons of why this sort of suburb meets the bill. Big infrastructure increase, new hospital, lots and lots of demand profile strength there, existing established landlocked area. It ticks a lot of the broad boxes and overlying demand across Melbourne increasing over time. Footscray is going to benefit significantly from that because of its proximity to everything, really, and its livability function there as well. Okay, so we've narrowed down the big macro reasons as to why. We've talked about the economy as well of Footscray, of that specific location, which is a big reason why we're looking at you being like, you should look at this place because it ticks the big reasons that we talked on. Let's just quickly go through the detail here. So the 10-year average for Footscray apartment approvals, 1,600. 5-year average, 1,100. 3-year average, 700. And last 12 months, 450 approvals. So we are at 25%, 28% of its baseline 10-year level. So make of that what you will. It's a huge drop-off in apartment approvals. And I looked at this. We'll play a little video here. What you have behind me is a huge industrial block. And you can kind of see it here. Graffitied out is, hey, we are thinking of building. This huge site here will have had a DA on it to build a mega apartment complex. You know what you see? It's been there for years doing nothing. No developer is going to build it. And I'll tell you exactly why. Because directly across the road, you see a beautiful apartment building where people want to live. Now, here's the problem. Those apartments in there, absolutely stunning homes to live in, they are trading at around $5,000 to $6,000 per square meter to go and buy and live there. You're buying a 100 square meter, 2-bedroom apartment in a beautiful block for 500 grand. That's $5,000 a square meter. Now, the developer who wants to build all of this into this huge development site here and build up so many apartments, that is going to cost them 6, 7, 8, 9, 10, 11, 12,000 a square meter. How on earth are they going to build it? And why will they build it when you actually sell your product at half the price it costs you to actually build? So when you do the numbers to this, you build this, the apartment's going to cost you $700,000, $800,000 to build. You're going to only sell it for 500 grand, maybe 550 because it's brand new. That tells you something really incredible right now. This right here will not get built, not for a period of time at least. What does that tell you? This is where it gets really interesting. You can draw a conclusion from this. It concludes that this apartment that you just look at right here, a new apartment, typically the sort of thing no one will tell you to go and buy. This new thing is going to become scarce. There are more and more people flooding into this city every single year than any other capital in Australia. And that will continue. More and more people want homes like this to live in. They are beautiful, livable dwellings. But they won't be built, which makes them scarcer and scarcer and scarcer. And it forces the need for prices to rise so this can actually get built over time. And that's exactly what you had with Brisbane. You had a huge surplus of apartments for a good 5, 6, 7, 8 years. And then it took a number of years for all of that surplus to be eaten up and taken by the market. in Melbourne right now, the surplus capacity of apartments have been soaked up. It is being soaked up year on year. And now we've started to operate at a level where there's not enough apartments coming up to replace these ones. And what you have is a golden opportunity. Over there, you are looking at a 7% yield. A 7% yield to go and invest in a location, in a product where it costs more to build it than to actually buy it complete. Makes no sense, which makes this a no-brainer in today's environment. Something that no property investor will actually tell you. Okay, so there you have a huge reason why that feasibility component won't work. Now I'm going to go through, this applies to all of them. So before we go through the 3 property opportunities that I want you to pay attention to in Footscray right now, I want to go through how to actually do due diligence on an apartment. Perhaps this is for a separate episode altogether, but we'll just do it quickly here right now so we can go through step by step. Adi, do you mind just speaking to this as to some of the DD we do on apartments? Because it's a bit different to houses.
It is. It's very, very different. And this is where sort of your persistence in being really, really diligent in terms of all the different factors you need to look at for the particular type of asset that you're buying. Sinking fund. Make sure there is 3 to 5 years of planned capital works funded as part of the checks that you do. Special levies. No outstanding special or recently called special levies, right?
I hate those.
Yeah, absolutely terrible. The cladding, the kind of apartment you're buying, right? Basically, at a high level, don't buy a cheapo one. Buy something that has been built well. It'll stand the test of time. Insurance. Get something that's current. Get a certificate that is current and has been updated in the last 12 months or so. This is a big one. Find something where the owner-occupier ratio sort of sits in line with the broader sort of story. So you want a block where there are more owner-occupiers living than there are investors. You don't want to be going into a massive block where 80% are investors, right? Or 80% are tenants. That's not... Ideally, you want to be avoiding that because there's a lot of churn with properties like that, and just your property just becomes one of many that are being sort of looked at. Clean title, no caveats, unregistered easements. That's really, that's quite consistent around houses as well. And yeah, just generally the building condition. I've obviously touched on this very, very quickly. There's a much more diligent process, but yeah, at a high level, these are some of the extra things that you really should be looking at that you might not be thinking about when you're thinking about buying a house.
Yep. Let's speak to the how-to here. Yep. So get the strata report as part of your due diligence. Make sure you get that and you pay for it. Do not buy an apartment without looking at that strata report. So you need to get that strata report. If it's not in the contract of sale and given to you, you must get it. Sometimes you have to purchase it separately from the strata company there. Usually they provide that or make it easy for you, given everyone asks for it. In that strata report, see the condition of the building, the logs of its finances, and ensure that there is enough money to go and upkeep that building appropriately, and then go and check if there is some unknown building issues that you won't see because your eye can't see it, but they've gone and investigated in the strata and seen that, hey, there's this expected cost in the future. So you got to be mindful of these things. These are risks of purchasing apartments, and you just got to do your due diligence appropriately. Team at Alaya do this really, really well, drill really, really deep into the apartment purchasing process. And quite often we stick to certain dwellings and types, and we avoid individual ones as well, where we just sense a little bit more risk because of the nature of how it's built and some of the issues that other buildings in the Melbourne area have that are quite similar. So you just want to be a bit nuanced with the type of apartment that you're looking at. Love the owner-occupier ratio explanation as well. That one is really, really clever as well. Good way to look at it. So that's the due diligence criteria. Now let's go through the 3 opportunities.
Sure.
I want to start with the apartment that we saw in the video that we just played. Might play a different video as well here. I want to start with this sort of apartment. I want to touch on the newish 5 to 10 year old apartment in Footscray and talk through why it is a really good opportunity today, where even when typically we would never say invest in something like this. Do you want to go through some of the reasons why this is attractive?
Yeah, I think, look, again, you've got to be nuanced with this. Like, you can very easily fall into the trap of finding an apartment like this, but it's part of another 3,000 other apartments that look very, very similar. So the one that we are standing in front of at the moment, it was a relatively smallish sort of block. We're probably talking about a few hundred apartments like that. The reason I really like it, these are trading at around 450, 400, 450. The yields, so if you sort of check the rents against it, yields are sort of sitting at the 6.5% mark.
Yep. Those are one betters. The two betters are about 500,
500, 550. Yep. Yeah, that's right. It starts, you're able to get into the market at that sort of 450 level, which is really exciting. If you are a lower risk investor and you're not really keen on buying something that's, been around for 40, 50 years, this is a great opportunity. These are good looking apartments. The replacement cost, if you sort of go through the framework or something like this, it doesn't actually make sense. 450 at a trading value for a one bedroom apartment, which will take a lot more than 450 to build, when you sort of think about it from a real logical sense, it doesn't really make sense. Like, how am I buying something that will cost a lot more to build? So these types of apartments I really, really like because they're attractive to more people, because more people want to live. The demand profile for this particular type of apartment is a lot more. If I think about me as a young professional, where I was living in my early 20s is probably not where I wanted to live in my early 30s. So I would be more inclined towards going into one of the apartments that you're looking at right now, Red, on realestate.com. It's a really nice looking apartment. They are, in the last 5-10 years, there's typically, a really nice garden outside. They have a really nice terrace. They have all these little bits and pieces that some of the older style apartments don't have. And you pay for that privilege. You pay, maybe 100, 150 grand more for that privilege. I mean, you walk past it as well, Red. What was your sort of take on
you're right.
that block?
450 is the price point. The one, I had found one in that specific apartment block, but I'm looking at a 2-bedroom apartment selling at 440,000. It's a very small one though. So, and they can go a fair bit higher. So you're looking at that 450 to 550. This is the apartment block. It's beauty. Yeah, selling at 550. But these are beautiful apartments.
These are really, really nice apartments. Yeah.
There's a whole group of examples. So let's go through that Fizo just for a quick second.
Sure. Red, you've spoken about this in the past, right? There are opportunities in Footscray with blocks of apartments and units that I think will serve really, really well in the next 5 to 10 years, right? There are blocks, 12 units, 15 units, 20 units, fully brick. They're still being retailed at 350, 400 a pop. And the rents are sitting at around 7%, 8% yield. And I think when you look at it comparatively to what the replacement cost would be in today's dollars, it doesn't make any sense, right? And it's quite a specialized commodity, I think, because there's just not a lot of it around anymore. Most of the apartment blocks in Footscray are going up. They're like these really massive apartment blocks.
Yeah, so the examples when you run through these, so I'm looking at I can do the quick little measurements on this. It's a very large 2-bedroom apartment with large bedrooms. So I'm looking at a 90 to 100 square meter apartment block in Footscray at the moment.
Yep.
It's a 2-bedder, 2-bath, 1-car spot, and it's selling for around $500,000. So you have an implied cost of this to be around $5,000 per square meter. Now, this is a beautiful, near new Footscray apartment where there will always be a strong level of demand for this type of home. People want to live in homes like this, so this cannot be rebuilt for the same price that it's selling for today, let alone profit on top of it. The average cost of building, and this doesn't include all the other costs, is at $6,000-7,000 per square meter. And then once you include everything else, you're sitting around $10,000, $11,000, $12,000 for medium spec apartments in Melbourne. So the price here is just so low that construction activity will pretty much come to a halt in areas like this. And that means that the supply cycle will slow down and the price cycle will move in the opposite direction, with the pricing of these apartments going up. We've seen the same thing happen in many markets as well in the past. So that's why we are looking very closely into markets like Footscray, and in particular smaller apartment blocks where you can be buying even below this $500,000 price point that isn't so new and slightly older. That is a type of product that we're looking at specifically at Alaya. You're also getting 6-7% yields as well, obviously gross yields, so they come down with net strata costs and things like that. But you have a very, very strong, attractive proposition for today's market. And you could see this shift happening where the price growth will move into the apartment market across different capitals, particularly in Melbourne here, where the supply cycle will come to a halt, while migration levels continue to increase over the next few years, with interstate migration coming back up to Melbourne. I just make this very, very simple. This apartment, it's a big 2-bedder. There's a balcony on it, roughly 100 square meters of foot space included with that 14 square meter garage. when you look at apartment plans all day, every day, you get a quick sense of this. It's roughly 100 square meters, selling at 550,000. That's $5,500 a square meter. The build cost, just go on go on any QS report thing, go in ChatGPT, go on Claude, go look at a bunch of reports on what it costs to build an apartment per square meter in Melbourne. You're going to be above $4,500, $5,500 a square meter. So you're already past it. That's with zero land and zero developer profit, zero for interest, zero for planning costs. So obviously these homes won't get built. Another reason why I really like these as well, it's kind of like, you can go buy a new car, it smells nice, it looks nice, it's yours, it's brand new, you might pay $100,000. That same new car in 2 years' time might be $60,000. The bulk of its depreciation has already happened because it's not brand new anymore and it's not being sold off the plan with off the plan commissions in place.
Yes.
So this home has fallen in value. The person who bought it would have paid $650, and now they're selling for $550. It was never worth $650, but that's what they would have paid because of its inflated marketing campaigns attached to it. So that is really, really attractive. And then you add the yield on top of it. You're getting a 6% yield for a Melbourne apartment. That's nice. That's very nice. I feel like it's pretty low risk. We haven't gone through, so this was an eye test, as you can see. So we haven't gone through the contract of sale of this and done the due diligence checks. But at a surface level, it is the sort of opportunity that makes a lot of sense for investors at different sort of profiles. If I'm a young investor, like really, really young, I think I'm going to look at one of the other opportunities that we're going to just touch on. But if I'm a different type of investor and I want this type of play, I actually think the economics of this play are the strongest. The reason why they're strongest is because you're buying the building itself at cost. So you're not paying anything else, you're just buying the building at cost and the land is just free. Obviously, it's an apartment, so there's no land there anyway. So oddly enough, it is very, very safe as well. You won't have to do any maintenance to it. It's strata as well. People take care of it. It's very, very simple and it's going to have the highest demand profile too, because people would prefer to live in this versus the ones around it that are a bit old. So it is a little bit riskier because it's new, but the economics of it are very, very strong because you're buying below replacement costs right now. You're very, very safe. These apartments won't get built, so you have something that supply won't come on. And oddly enough, this is where you need to flip your switch, everyone. This is where you need to completely rewire all the training and all the thinking that you've had. This apartment is now scarce. Even though there's 200 of them, it's actually scarce because these apartments need to keep coming in and they won't keep coming in, which makes your product scarce and increasing in scarcity, at least for the period ahead. So those are some of the takeouts.
I think I have a slightly different view because when I sort of think about, I think if you sort of turn the corner from where we were, if you go, a couple of kilometers down, you're still within Footscray. There are some very, very large blocks. My friends live in this block. One person owns it, another person rents.
High rises.
Very high rises.
Don't get those.
Yeah, but what I find really attractive about the ones that probably have a slightly lower demand pool, like some of the ones that we went through, is that the type of apartment is unique. It is red brick. It is part of a 12 block. There's not a lot of activity that can go on around it. Like there's no land available around it. Right? So they're very, very unique and they're very, very scarce by nature, right? So
let's just pause there for a second.
Sure.
Adi is talking about the second opportunity. So opportunity number 2 is buying an existing apartment in Footscray. We'll show images of it. Here, watch me act as a real estate agent for a second, where I walk outside and check out this Footscray apartment that I'm like, ooh la la. So we're here in Footscray and this is exactly where investors should be looking right now. You have apartments just like this one, 2 bedrooms, 1 bath, 1 car spot, low set, flat. You're looking at 50 odd plus years old. Little reno can be done here. You're trading at around $350,000 and you're getting a 5, 6, even a 6.5% yield in some of these. This is a very, very safe investment and you could get in very, very cheap as well. With $350K, you'll need roughly 10% to cover all of your costs. That's only $35,000 to get into your first investment property. It's a great way to get into the market nice and early and scale up. And the reason why we really like this is the macros are so strong as well. Look around everywhere you look. Let's just do a quick little 360. What do you notice? We're in a nice quiet location. There is a hospital a kilometre or two away. A university is here and a very large population. And there's not a single development or crane in the sky that you see. The reason for that is apartment supply is constrained here right now because feasibilities don't stack up, which makes the apartment right behind me, the sort of stuff that Alaya is picking up for clients left, right and center at the moment, really, really attractive. No supply coming online, high yields, an environment where Melbourne's underlying population will continue to increase in one of the most in-demand, desirable, livable pockets in Melbourne. This is a no-brainer right now, and opportunities like this are quite rare all across Australia right now. So this is the defensive play of 2026. I said right now, the macro story is play defense. The everything everywhere property boom, that's finished. That's old school news. You need to adjust to the macro environment, and assets like this, these are the ones that are going to do well over the next few years.
So I really like the first profile, right? I think it makes a lot of sense for a lot more people. It's the newish type. It just looks nicer, right? You have the likability factor. Yes. That being like, oh yeah, I can see myself living here. As much as investors like to be incredibly objective about the process, they like to see themselves living in these places. I'm like, yeah, I can live here. It makes sense. But this is the little nuance that we probably haven't gone through deeply enough. If you turn the corner, there's a lot more like it in other parts of places like Footscray. Mm-hmm. What I really like about the second profile is, one, you're getting in with less capital. I think that's a big win. But they're very unique in their nature. If you go through that whole street that we went through, there's probably 7 of those blocks available. Not a lot happening around them.
And if you think about the type of investor this sort of suits as well, so obviously not everyone has the capital to deploy into, a sort of metro market, that's 700, 800K level. But this is for someone who is risk averse, so lower risk tolerance. They don't really want to approach regional markets. They have a fairly low budget. You're talking about the 400s or sub 500. So this is a great opportunity to get into a market where you get really decent yields. You're still in the sort of the major capital city, and the price point is something that is equivalent to a regional property.
You're not building those anymore. I mean, you understand this probably better than I do in terms of apartment replacement costs. To replace an apartment like that with the same build type, what would you be looking at here? If you had to replicate that particular red brick, 2-bedroom, well-built apartments. I used to live in those. Those are well-built.
I really like this for the same reason. The replacement cost also matches with, it's at replacement cost. If you're buying for $350 for a 2-bedroom apartment, it's very hard because nobody builds walk-up apartments with no basements anymore. It's not a dwelling type that Australians build. Yep. We should be building those because they're more feasible to build. Yep. But again, it's in and around the replacement cost. So it meets the same profile. You're buying cheap. Yeah. So that is a big, big reason. And you're right. Like, they won't be built anymore because no one could build those, and that doesn't make any sense to go and build. So again, trading below replacement cost, wonderful, wonderful opportunity. That's why you hear my real estate video where I was playing this scenario.
You were very excited. I was excited because I was like, oh, this is where I used to live.
It was a very exciting opportunity. Yeah. And it is something to look at. Can you touch on the type of persona that suits this type of apartment, especially versus the new one that we just compared it to?
So we bought a few of these, and the personality that it suits, I think it's quite, it's the low risk investor. When I say low risk, they are yield conscious and they are capital conscious as well. So they don't necessarily have $80,000, $90,000, $100,000, which is what a lot of other agencies have. They're benchmarked, who can come into their sort of client profile. Like, you need to have an X amount of dollars to be able to come in. So these guys are able to get into the market at that sort of 10% mark, which is, if you add in all the stamp duty costs, etc., you're looking about an entry cost of about $40,000, which is kind of insane. Yield conscious as well. Some of these apartments are quite literally going at 6.5%, 7% yields as well. So if you're a low risk investor and you appreciate the fact that these types of dwellings are quite rare, I guess, in the market that you happen to be in, you want something a little bit better built, these are the profiles that have been sort of very inclined to purchase these types of properties at Alaya. We bought probably about a dozen of these so far, and the investor profile is generally quite similar.
Sure. I'll go even further. I think this suits anyone and everyone right now. I said it in the previous episode. I'm going to go buy a bunch of these opportunities. I haven't bought a property under a couple $1 million for a long time. Like I try and buy bulky ones intentionally because I don't like individual homes. But I'm saying to the advanced investors, yeah, the opportunities are funny. It's like, do you really want a $350,000 home? Maybe not. Anyone who's got bigger budgets, you might have a $1.5 million budget, but you might still want to look at this. Right now, the macros are so good that this is an exciting opportunity. I'd probably say steer to opportunity 3 if you're here, which we'll touch on. But it steers to buy and hold investors, it steers to people who are just looking for investment activity, it steers to anyone who's hunting for yield, it steers to anyone who wants short-term capital growth in the next 3 years, it steers to anyone who wants long-term capital growth, particularly this opportunity. So this is the difference between opportunity 1 and opportunity 2. Opportunity 1, buying a newish 5-year-old apartment, I think it could do really well. I'll go so far as I think it can do extremely well over the next 3 or 4 years and have that Brisbane story attached to it. Yep. But if you pan it out 30 years, it's going to do nothing for an extended period of time because this newish apartment, the construction cycle is going to start again. Prices are going to rise. It'll double or something like that over the next 5 years. And you're going to be like, hooray.
Yeah, developers are going to be like, hey, let me build some more. Yeah.
Exactly, right? So then the construction cycle it's going to be a bit like up and down. It's going to be a little bit like what we'd said about the Darwin property market where it just shoots up and then you're a little bit unsure. Newish apartments like that. You want stability as a property investor. You want to manage your risk. You want to make sure you have something scarce that won't be rebuilt, that won't ever have any comparison, and you want the land component attached to it too. This is wonderful. This is so good. It's so good, I've convinced myself I'm going to buy a block of apartments too, which is opportunity number 3.
Yep.
Blocks of apartments. So this is the same opportunity. Let's just buy the whole building now. Yep. Okay, we found another asset that we really like. This one's not even for sale, so we are going to go through some of the frameworks of what we look for at Alaya when you're looking at alpha and beta property investing. So beta is the market movement, finding locations that are going to do really well because it makes sense. Alpha is where you find an asset that is a little bit like a unicorn, a property investment that gets you everything that you want, but you're not even aware of it. Right behind me, you have that play. Let me unpack why. You have a corner lot with a really wide frontage. Look, I'm live on the ground right now, so I'm gonna have to do some funny old measurements here. Let's do a quick little walkthrough and work out how wide fronted this is. So you got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20. You're looking at nearly a 25 meter frontage on one side and another 30 odd meter frontage on the other side, even longer. It's a dual lock as well with multiple entry points and multiple income points. You are looking across the road from a huge apartment site and another one that may go up at some point in the future. You have everything that you look for as a property investor. You're looking for long-term growth, appreciation potential from land value increasing over time as the apartment cycle story continues. You're looking for multiple incomes. You've got that right here. Now, the rest of this is about the deal. Once you've found an asset like this, you want to make sure you're getting a good deal and running your numbers properly. This is what you're looking for, and you'll need to go through the contract of sale specifically to go through any easements, where the drainage, where the sewer is. You want to be looking for the ground. Come take a look here. So you want to be looking in and around for these gutter points right here and working out exactly where they are, because this to me could easily be a terrace site over time. And when you look for things like that, you want to be looking for where the driveways can go through. So it's a sort of home that has it all. No big trees at the front, nothing restricting it. Here's the multiple income points attached by the garage. So there is a lot going to this home. This is the sort of alpha beta play that you look for. If this was on the market, we'd be looking at it for sure. And to give you a little bit of context to the terrace play that I was just touching on, right next to it, right very much attached to it, you have a 3 plaque of terraces just here, side by side, attached to the very home that we're talking about. It might actually be the same development. It looks like something's newer than the other, but you have that sort of framework of exactly what we're looking for. They may not pass the standard due diligence checks that everyone has, but it has the frameworks of that alpha beta property investing that we're looking for when you're looking for that good uplift potential in future. And if you're a developer, someone who wants to develop in the future, this is the sort of home that makes a lot of sense. Here's another type of really fun, quirky property investment that you've got here. You've got a mixed use asset right behind me. You've got a shop on the ground and a couple apartments right on top of it here as well. It's also a nice corner lot. Again, no trees on the side and no curb guttering issues. That allows you that development potential over time. Again, really wide frontage on both sides as well. So yes, very wide. You're looking at over 25 meters, perfect, nice square shape. That gives you so many opportunities, no cutouts, nothing like that. That stops development. So many opportunities here. And again, across the road from really much bigger things around, which gives you the sense that, hey, planning controls allow for it. You generally go from really high use to higher. It gets staged. That's how planning works over time. When you have something really high right next to it, typically isn't a house, what happens next to them is they get lifted higher over time as well. It's a good, really good signal for what's going to be uplifted into the future. This is a good way to buy that alpha type asset, the one that's going to be a little bit of a unicorn, while also getting you the yield to navigate this cash flow crisis that we're in for property investors. You can look at assets like this, and funding it very, very realistic and possible. Most people are afraid of this because of commercial loans and things like that. But you're going to look at a loan that looks much like a resi loan. So many banks are funding this now. Pretty easy to get funding for. Might even be easier because of the yield that comes with it and the tenancy here. You might even be able to get it if you have serviceability issues too. So many great opportunities with this asset right behind me.
Potential yield conscious, you want something that carries a little bit of yield. So this, I've sort of spoken to investors who are looking to do this in their SMSF. They want just a bit of a sort of, ensure that they're not buying something that's going to be really cash flow poor. You have a fairly large budget. I mean, if you think about it, you extrapolate this across 12, 15 apartments, you're looking at a $3, $4, $5 million opportunity. It's a quite a hefty bill to go into. But you're also padding out your risk a little bit, because to me, if you're buying this kind of apartment 12 times over, and the underlying fundamentals in the opportunity exist because you're looking at sort of like the macro frameworks, you're like, wow, there's like really nothing like these being built. This area is going through a surge of demand. There's a new hospital being built. How far was it from where we saw? I think it was like 1 kilometer away, right? So realistically, there could be people living from those hospitals in some of these apartments.
Sure, yeah.
You put it all together, yeah, I want 12 of these. And if I look across the board, I'm looking at about a 6.5%, 7% yield. Some of the costs that come with it, I don't have to worry about because I own the whole freaking thing. The land that sits underneath it is all mine as well. So it matches the profile of an experienced investor for sure. Someone with a large capital base and someone who's a little bit, thinking, I want the Melbourne story, but I also want the yield that goes with it. And I want to take advantage of what I think is I'm not going to say once in a lifetime, but once in a decade opportunity.
What I really like about it, you've framed that so well. What I really like about it is if I'm a value add investor, so this is the advanced property play. If I'm a value add investor, some of these blocks of units need a little bit of love. And what we're going right now is a development site in Melbourne. And that was previously a single home that somebody invested in. That is now being turned into a group of townhouses. You're looking at row houses here coming up. We're in Footscray at the moment. A development opportunity has come up, and this particular person is going to be selling into a market that doesn't have much supply at all. When you look around, there isn't any development happening, and you have this particular home here. It's probably around 1,000 square meter block with a 20 meter frontage coming here, and you have this property investor turning their asset into multiple income streams over time. Now, one of the big hacks here that people use into the future is they develop their home into a home like this, and that yield carries into the future. So you turn a 4% yielding asset, maybe a 3% yielding asset, into something that's more like 7 or 8% on the cost that you've actually contributed, and then you hold it and you retire on it over time. So right here, you have the development site, and here you have an example of what it could turn into. A very similar block. You've got 6 to 8 townhouses here, and this will be converted there. And the owner here may just hold on to them and use that income into retirement. I can't be bothered buying one apartment and then showing that apartment love. It's like, wow, that's a lot of work. Now, if you're a first-time investor and you're starting out and you need to manufacture equity and you're building a property portfolio out, go and do that. That's a wonderful opportunity. You can go in with 35, 40 grand. Amazing. You get into the market. Absolutely wonderful. That's opportunity to just buy a single one of these apartments, either 1 better or 2 better, whatever you can afford. Put a lick of paint on it, put some carpet on it. Wonderful starting point to your property portfolio. Strip out the equity, go again, buy until your borrowing capacity is over. That's your strategy to build your property portfolio, and you will nail it. And you don't need that much to start. If if I'm 21 years old again, when I first bought my first property, or 22, whatever I was, that is exactly what I'd be buying today, this sort of opportunity. Fast forward a decade or so, the block of apartment play is very, very attractive too. The value add component is beautiful as well, where you can go make the apartment look really nice, make it all perfect, and you do it to one building at a particular point in time. And you are buying in and around that replacement cost. These things they might cost $3 million to buy, but it'll cost $3 million to replace as well, $2.5 million. So you're getting the land very, very cheap. And to actually replace it, add in all the ancillary costs, you're going to spend pretty much at replacement costs.
So, it's actually funny. So about 18 months ago, I remember having a conversation while you were talking, it popped into my head, talking with a friend of mine who was looking for an apartment for his daughter in Williamstown, which is actually not far from Footscray, sort of inner Melbourne as well, inner West Melbourne as well. And we were having this discussion. We were sort of talking about there's something, these apartments seem to be quite unique in its way. He was looking at an apartment block of 20 for his daughter at the time, and she was 21 years old. And I remember having this conversation with him saying, if you pick up something that has a decent renovation potential, right? If you buy it fairly cheap, because no one was really thinking about apartments back then, you buy it relatively cheap, and you put some love into it. She puts a little bit of her sort of deposit towards it. So they ended up executing. It just popped into my head. It's so funny because I actually caught up with him a couple of days ago. They bought their apartment for I think something like $460. So what you just said has actually played out already for one of my friends who started this 18 months ago. They bought it for I think $460. I think they gutted the kitchen. They did a really nice reno to the apartment itself. She is now thinking of selling the apartment, and the price points that it's sitting at is sort of close to 600 now. So that process that you've just talked about. Now, if you think about it across an entire block of apartments with someone who's got a higher capital base and looking to add love, I mean, that is a huge opportunity that sits.
It's $1 million.
It's $1 million. Exactly. So across the board, while you get the land for free, which is not really the case if you're
and you get the yield uplift as well. That's
massive yield uplift.
Because you can rent them significantly more per minute.
100%.
They're kind of newish.
People want to live in nicer apartments.
Awesome. I love this investigation series into Australia's greatest property opportunity play right now that ticks the current boxes of playing defense, that provides a suburb level bit of research here that we've unpacked. And we've done Footscray, but there's quite a few. We like Footscray a lot, but there's quite a few with different reasons that you can come to. If you want us to do more of this, where we deep dive into this specific opportunity and want us to pick out different suburbs, you and I make another trip, take a look at different locations. We've been to a lot of them already, and we're buying in quite a few of these areas as well, not just Footscray. We'll do that for you. Just ask. Put it in the comments below. There is so many compelling reasons. We've gone through the 3 opportunities and the 3 different type of personas that suit. The second opportunity, where you buy an existing older apartment in these locations at replacement cost, is the golden one. That's the one that Alaya is purchasing most on. The first one, where you buy a newish one, also works, and I do think it's going to be a really strong performer, but it is riskier to do because the history tells you they've been poor performers. And then the third one, it's for the advanced investors. At Alaya, we are representing a group of clients that are looking for advanced opportunities, call it Alaya Private, where it's property investors with significant resources that are looking for the opportunity of today and want us to help execute my favorite type of play and exactly what I'm looking for right now as well. So we've gone through a whole range of opportunities and the suburb level analysis and did the macro story here to this great opportunity. For those that are watching, if you need help executing, speak to my man Adi here and his great team, our team at Alaya. They can help you find the right apartment. And if you don't want to do that and you want to do it yourself, follow the due diligence checklist that we have just gone through here. It is super important that you purchase this correctly. It has a little bit of a different mix to it than purchasing houses off the bat. So just do your homework appropriately.